The slowdown continues. Whatever happens with trade, China's economy will slow in 2026. Simon Cox, China economics editor, The Economist. 3 questions loom over China's economy in 2026. Will retail sales suffer from a period of payback as consumers refrain from replacing cars, phones, and appliances upgraded in 2025 with the help of government subsidies? Will the trade war with America throw the economy off course? And will the property market, ailing since 2021, recover? The answers will determine whether China can sustain its recent pace of growth. Start with consumers. China's leaders are often accused of favoring manufacturing at the expense of consumption. But many manufactured items are, of course, also consumer goods. In 2025, the government tried to kill 2 birds with 1 stone by expanding a trade-in scheme for cars and appliances, like the Cash for Clunkers initiatives popular after the global financial crisis of 2007 to 2009. Households could receive up to 2,000 yuan to buy new fridges, microwaves, smartphones, and even smart toilets. This was so popular that some provinces ran out of money ahead of schedule, forcing them to wait for the next installment of funds from the central government. Sales of consumer durables took off. The worry, however, is that many of these purchases would otherwise have taken place in 2026. Households that have shelled out in recent months are unlikely to replace goods in the year ahead. How often do you need to smarten up your toilet? Retail sales in 2026 could thus suffer from payback, falling below even their pre-subsidy level. That danger may force the government to renew the scheme for another year. But consumption will still probably grow more slowly. If consumption does flag, Chinese firms will look again to overseas markets to fill the gap. That could worsen trade tensions with countries flooded with Chinese goods. The trade war with America could also flare up again if the truce agreed in South Korea in October 2025 breaks down. China would not relish another trade spat. Higher tariffs would deal a further blow to demand. But China has been successful so far in finding new markets for its goods to replace sales to America. And if exports did falter, the government could cushion the blow through additional fiscal stimulus. The trade war will determine how China meets its growth targets, not the doom loop. The property market has been blamed for snuffing out a tentative recovery. The government had promised to stop the market from falling, raising hopes of a more decisive rescue effort. But those hopes have not been fulfilled. A recovery will therefore depend on the slow grind of market forces. Thanks to falling prices and rising incomes, houses are becoming more affordable. A typical 100 square meter flat costs 7.6 times the average household's income in 2021, according to Gave Caldragonomics, a consultancy. That was down to 6.3 times by mid-2025. A growing cohort of people must also be tired of waiting for a bigger home or a place of their own. They will not want to wait forever. And even if they are too nervous to buy, they could rent, which would also help the market. So, the answers to the 3 questions looming over China's economy are yes, no, and maybe. Yes, consumption will suffer from payback. No, the trade war will not derail growth, and maybe, just maybe, the property market will bottom out. The result is that China's economy will slow but not stumble in 2026.